through all the subsectors within the larger data that you've compiled. So run us through the key drop-offs within those subsectors.
Thank you very much. What we have seen is that the new sales orders, which is by far the biggest component of the PMI, has also declined by over 5 index points, and that is now well in contractionary mode below 50. We've also seen the business activity index declining by a massive 9 index points, and that's also now in contractionary mode below the 50 level as well. I think what we have seen is that the trend over the last couple of months has been one of moderating PMI numbers and weakening sub-indices as well. And we're now seeing significant declines coming through. Unfortunately, we've always cautioned that these numbers were obviously holding up quite well in the context of a global scenario, and it was unlikely to be sustained into the future.
There are, of course, also local factors that feed into this data, because it's not just about a slowdown in Europe, it's not just about a slowdown in China. We saw that manufacturing data coming out today, really worrying data from China, but it's also local factors. Just run us through some of those. Eskom buying back electricity from big industrials here in South Africa, work stoppages, closure of mines. How does that, to what extent does that impact manufacturing data?
It has had a massive impact on the manufacturing data. What we have seen is that if one looks at the averages for the first quarter of this year, so quarter one this year we averaged about 55. We've always said from quarter four last year that we've seen a lot of the once-off benefits coming through, almost a restocking phenomenon. We know that in the steel industry there was the restarts of steel mills, etc. There was some significant the benefits to the auto industry that has come through in quarter one as well. Unfortunately, those typically have the impact of being a once-off benefit, almost like a stimulus to the sector, and you almost need a recurrence of that to continue for the index to be sustained above the key 50 level. What we have seen is that unfortunately our mining sector has been significantly affected by work stoppages, as you said, but also as a result of continued commodity prices that have been quite weak. For example, in the platinum sector, we know quite a few of the platinum mines are putting some of the shafts and mines on care and maintenance. A lot of those mines are affected by contractor workers. And with that contracting mining, we've seen further declines in employment in that sector as well. So clearly those sort of macro issues affecting the industry and affecting the sector in a hard way as well.
Talk to us about the auto sector, because on Thursday, a 58 million rand automotive hub was set up by government in part and by MTN. So that, of course, would be a boost to the local auto sector. So to what extent are we seeing initiatives by government helping to cushion the manufacturing sector here?
I think we are not seeing enough. I think ideally we should see a lot more of those initiatives. Bearing in mind that there is obviously on the political front, there's a lot of we know what happened over the weekend, the elective conference that's coming up late in the year. So we've got a political uncertain environment that is weighing on the sector as well. And we need a clear policy direction as well from government. We need incentives. We know, for example, over the last couple of months, we've seen a weakness in the rand, and that has boosted the sector. We recently have seen a strengthening of the rand. Unfortunately, we need sustained pressures both from a macro point of view and also from a political point of view to aid and assist the sector as well.
Is rand weakness at a level that it's trading at right now? Because, of course, we've seen over the past 2 trading days the rand strengthened quite substantially, sitting at 8.14 rand right now. But has rand weakness been, on a net basis, beneficial to the sector?
Anecdotally, the companies that we have spoken to, they all say that they've seen significant benefits from the rand weakness. Bearing in mind that the rand weakness has 2 benefits. Firstly, we see a drop-off of imports. So that assists local manufacturers in terms of supplying local demand. But then also our exports become a lot more competitive as well. So in the chemical sector, for example, we've seen the likes of AECI, Omnia to a lesser extent benefiting from their trend. But we've also seen over the last couple of years, given that we've had a fairly volatile rand, but also a fairly strong rand over the last couple of years, the manufacturing base has been adjusted downwards to accommodate a stronger rand. So the rand at current levels above the 8 level, I think, is quite stimulatory to the sector. And even though we have seen the recent strengthening, I think overall the rand is still significantly weaker compared to, say, 12 months ago. And that will benefit the sector going forward as well.
As you say, it could be stimulatory in the short term, but we do need to put this into context of a global economy that appears to be subdued when it comes to growth going forward. So what would you say is the most important factor to get the manufacturing sector locally back into positive territory when it comes to that key 50 level, which divides subtraction and contraction from expansion in the sector?
I think we have seen, as you said, the currency playing a role, but we also, as I said, we need a much more stable and certain political and economic environment. Unfortunately, we know that the ANC, for example, has deferred on the whole nationalisation debate. I think you need certainty around those things. What is even worse than policy outcomes is uncertainty around those policy outcomes. And as a first step, I think we need certainty from the government in terms of all of those measures, so investors exactly know where they stand on potential investments into the country. What we also need is a concerted effort in terms of job creation. We know that the sector has slack capacity in terms of capacity utilization levels. But if we can get sustained employment initiatives, projects going on the go as well, that will also aid the sector as well going forward.
And in terms of local production and the requirements that government has for the likes of Transnet, for the likes of PRASA, when it comes to including local content in their new rail trains that they're using, for example, as I said, in the railway lines, is this starting to help the manufacturing sector at all?
Bearing in mind that those initiatives has two benefits, an immediate benefit in terms of immediate almost stimulatory boost to utilization levels, to capacity utilization, to manufacturing, and also to employment levels. But you then also see the benefit in terms of, for example, the expansion of our coal terminals, etc., in terms of allowing the sectors, especially the mining sector, for example, to grow into that capacity. We have seen constraints in terms of the Transnet, the infrastructure, in terms of supplying more coal, supplying more iron ore, etc., from the country. So the immediate benefit would be obvious in terms of alleviating the immediate pressures and also stimulating the sector. But then the longer term benefits, I think, is obviously quite significant to the sector. And ultimately, it's all about utilizing your capacity and expanding your capacity into the future as well.
Talk to us about the jobs picture when it comes to the manufacturing space. A key employer in South Africa, the employment index, Kagiso employment index, slipping from 53 to just over 46, 46.8 is where it stands in June. Does this mean the sector is shedding jobs now?
We don't think so. I think what we have seen last month is recovery in the employment index, so that went above 50, but that was based on a very small sample within the survey. I think between 10 and 16% of the respondents said that there's been an improvement in terms of the employment levels as well. The absence of that and also some of the respondents saying no change has resulted in that slipping below the 50 again. What we have seen, though, is that on the employment stats, SA, for example, the employment numbers have seen a creation of jobs over the last period. But what we've also seen is this trend away from labour broking towards own employees. And I think some of that distortions is affecting the numbers we have seen last month as well.
So read into that number with caution. Of course, we will be catching up with you next month to see what kind of trend we are seeing in the employment space. Abdul Davids, Head of Research at Kagiso Asset Management.